Face Warriors, how's everyone doing? Is Magnum PI in here? Good Fed day to everyone. That's a big event today, the Fed, and there will be a press conference. So a lot of markets are kind of holding their breath. I think it's short-term constructive that the S&P's got back above this 252 level. Actually makes me think if the Fed is dovish friendly, we could get one more shot up. Shorting zones for me for quite some time, all the way back here. I was talking about 2690, 2700. So also talking about perhaps a February break, which is something that is historical, seasonal, usually applies to commodity markets, a February break. Since equities have been commoditized, I'm throwing them in there. Also, I believe an interview I did with Peter Goldstein quite some time ago before the December crash talked about some type of blackout period for buybacks in February. So that would mean that some of the support that's there, yeah, it's a little distracting. It's okay. So Euro, I was looking to get short at 61.8, had orders in there, only got up to 50. So canceled my limit orders. I'll wait until after the Fed to see what happens here. You know what? Here's a news flash. Maybe I'll miss it. So dollar, real key in here. Yesterday talked about this 3 drive to a bottom. And, you know, after last Friday, the dollar bears are coming out of the woodwork again. 96 is going to be a big level. But when you look at it, if you want it to be dollar constructive, you could say left shoulder head, right shoulder, and then neckline coming in here. So that's up here. 96.59 would set the stage, in my opinion, of potentially new highs coming. So we're, you know, stuck in the middle with you into the Fed. I don't have a lot of high conviction on a lot. Actually, crypto has a little bit of a heartbeat. I know you guys are thinking, what happened to Dale? He never used to talk about crypto. Well, you know, all the despair in the markets now and the fact that we, you know, have held this low since it looks like the beginning of the year, like when crude took off, and might be carving in a higher low here on the daily. So far, 78.6 has held. I've seen some patterns for 88.3, which would take it down to 3,200. But, you know, I'm not talking about, you know, 100,000 Bitcoin, but why can't we rally back to 5,600? And of course, a major breakdown where it was really a straight line break, 6,000. You have some 50-week moving averages that come in here. So why can't we rally back to 6? I think most technicians would not declare this a bottom until we negated the breakdown at 5,900, 6,000. And actually, even though Bitcoin's only up a shade, some of the other majors, maybe that's what I'll do. I don't step on anyone's feet. You're getting a nice move in Ethereum. Actually, has had a better pattern than Bitcoin and Litecoin as well. So, I mean, just keep this in perspective. Litecoin, I remember my son-in-law, my stepson, was, you know, I think liked it. In here, yeah, right in here, 230, something like that, you know. all its friends were getting in, and they said, well, Bitcoin is too expensive, so people were going to move into Litecoin. And I mean, look at where it was. It's had a deeper retracement. Both Ethereum and Litecoin have retraced, I believe, 90%. So that could satisfy the end of that the bubble, 90% of the air has been let out of the bubble, out of the balloon. So just something that, I have and kind of a intuition about in here that we could end up with some type of turn. So just paying attention to this, even if, in fact, I'm glad no one else is. So you talk about buying Bitcoin to anyone right now, they think you need to be stabilized. So I'm going to leave the rest of the board to the analytics crew, ForexAnalytix crew, and curious to see. I know that Blake sometimes, and Steve, they don't worry about things like the Fed. They'll take positions. Am I describing it correctly, Blake? I know that you carry positions, I believe, into red events like this. If you have a lead, or do you flatten out?
I can. Hold on really quick.
Okay, buddy.
About the FOMC and
I noticed yesterday you were looking for a pullback in cable, and got one. But go ahead.
Sorry.
It's okay. I know you're multitasking.
No, I was just tweeting just because I'm going to talk a little bit about we're going to cover the ADP and then talk about the FOMC as well. So I'll take over here. So you were asking me a question if I take positions into red events. Red events, for those of you, sorry, I'm just kind of clearing my throat here. Red events being like, something that's going to be high impact in the market. And I will, not necessarily today. I'm not going to, let me put it this way. I'm not going to go in and establish a new existing position ahead of the FOMC.
Okay.
And I'm not going to do that for the jobs report 9 out of 10 times. I mean, if there is something that I feel strongly about, I might. And like I said, 9 out of 10 times I'm not going to. But there are the extreme circumstances where I'm like, dude, I don't care what the Fed says today. I'm buying or selling the dollar, and I'm getting a position now, and I'm going to go ahead and add to it after the event. Sometimes I do that. Like I said,
how about say for example, you have a position you put on a week ago or 4 days ago.
If I'm profitable,
you'll stay with it.
Oh yeah, especially if I feel that the likelihood is that we're going to see a continuation. So, for example. And this is not a live example because I'm not in it. But let's say I was.
But you're live right now, buddy.
I am live. But let's say I bought the euro last week. Let's just say false breakdown. I picked it up at 113.50, and then I'm long. And we're currently trading on 114.25. A little higher than that. I would stay with that position because I do feel ultimately that the euro dollar is actually very well bid right now, and I think it is going higher. So I would stay with it, and even on a dip, I'd be buying more and then looking for an eventual break above the 618. So that to me, if I was long the euro right now from a good vantage point. Being long from like down here, somewhere down here and looking to add to it, I would stay long, even if it's just a portion of my trade. That's not the case today. So, but I'll give you my 2 cents about the FOMC here in a second. I want to get past ADP, and then I'm going to talk a little bit about.
Okay.
I'll talk a little bit about how I feel about the Fed, because we do have ADP data coming out in just a few minutes. So let's shift perspectives a little bit and talk about the dollar yen. because the ADP, just so you guys can see, we are looking for 180,000 jobs to be created, private sector jobs. Now, remember, this is not the BLS, and the numbers for our jobs report, I don't believe are going to reflect the shutdown. So that's going to be next month. I'm assuming that you're going to see the numbers impacted more for the jobs report. Although the NFP, we're looking for 165,000 on Friday. The number should be significantly less going into next month's numbers. But from a private sector jobs report, let me grab the Bloomberg here. So, okay, so if you go to the Bloomberg data, ADP 181,000, Forex Factory has 180. Hold on, let me see. Investing.com. Investing.com is looking for 180,000, which is in line with is in line with Forex Factory. So Bloomberg is looking for 180,000. So that's going to be the number that we're going to be watching here in a few moments, and I'll come back to that obviously a little bit later. But when we're talking about jobs, I think the number should be. We shouldn't deviate too far from 180,000. But as far as the dollar yen goes, I mean, key support right now is at 109. And if you can't see it, you have to go maybe to an hourly. We have a nice little up channel. I think this is going to be the best view right here. So probably right there. So 109 is going to be pretty key. So you can see this little breakout point right here. That's been a lot of, resistance, support. Channel support comes in at 109. So that is critical for bulls. And then, obviously, they want to hold that. Now, bears want to keep it below 110. So, we are range bound currently. And a break above 110 would be pretty bullish. It'd be bullish for risk. It would be bullish for the yen pairs. If you haven't seen, the euro yen is nudging itself right up against the 125.25. This is a really big resistance for me. You can see I have an alarm set for it and everything. Aussie yen, because of the better than expected inflation data, we're pushing Aussie yen right into resistance as well at the 78, 80, 79 yen level. All really, really key resistance.
These risk-on pairs, Blake, build the case that the S&Ps have not topped at these levels, and maybe we are headed up towards 2,700. What do you think?
They do, and it kind of plays along with my FOMC analysis, which I'll talk about as soon as we get past the ADP, because I kind of agree. I mean, technically, the risk reward is to be short the S&P here. It really is. I mean, you look at the this resistance right here.
Yeah, the box.
It makes sense to be short here. I'm not short S&Ps, but it does make sense to be short from a risk reward perspective. But you're right. Risk is held up very well. Aussie looks strong. The dollar looks relatively weak, and I think the dollar looks like it wants to continue lower.
Crude looks good. The metals look good. Everything up together. Everything up together, bro.
Yeah, crude looks good, but a little divergent, which would make sense. I mean, I could see
55-ish maybe.
Yeah, anything really happening in gold. But let's go talk about the ADP really quick. So
all right, I'm through interrupting.
No, don't worry about it.
I'll mute myself. It's the only way I could control myself.
Look at this number right here. Okay, right where my cursor's at. Let's see, how much time do we have? Oh, there we go. 213, good number. So Aussie yen pushing up a little bit, good number. And the euro's slipping. We had weak inflation data out of Germany too, just a little while ago. So I'm hoping the euro dips to 114. I I don't know if we're going to get it, but I've been really hoping to see a dip in the euro dollar down to 114 today, because I want to be, ultimately I want to be long. But you know, the euro, very resilient. The euro's had a very tough time going down. So we're past ADP numbers. No big reaction here. Stocks like it. Next month, you know, jobs data is probably going to be a lot more important than this month, because we want to see what the impact of the government shutdown has been. Which, you know, surprisingly, the ADP numbers might not be too bad next month. We might actually see a little bit better data out of ADP, but worse on BLS, so or the non-farm payroll. Okay, so let's talk about today's FOMC, because this is going to be pretty important as far as the market goes. Now, I'm going to reiterate what I just told you guys a little bit ago about the euro. I think the euro looks bullish. There's a lot of reasons that are, you know, got me believing that the euro dollar's got higher levels coming. One of them was the poor positioning in the euro going into last week and the reversal that we saw on Friday. You can see the relentless bid in the euro dollar, no matter what we've seen. Even the weak German inflation data this morning doesn't matter. The euro dips and it's been bought. Italian budget headlines yesterday, pretty bearish for the euro. Didn't matter. Euro dips to 114 and change, and it's just bid again. So these are really tight ranges that we're dealing with in the euro dollar, and I think that the FOMC may have the ability to loosen us up a little bit. But what I'm hoping for is a relatively hawkish FOMC, because the market's actually pricing in a bit of a more dovish FOMC. You know, people are looking for the replacement of where it says some further gradual increases, and looking to replace it with more of neutral language in some of the statement, but still keep maybe some roughly balanced, you know, verbiage in there. But what I'll be looking for really is, if the Fed chairman Powell hints that the balance sheet will end up being a little bit more larger than previously stated by some of the Fed officials. Now, if that's the case, if that's the case, that could be, you know, it could end up keeping the dollar under a little bit of pressure. However, if he doesn't mention anything about changes to the balance sheet, that could be more of a hawkish surprise and actually get the euro dollar back down to 114, where ultimately I want to be long. So let me just, you know, be clear here. I'm hoping that the euro dips to 114 or below, and then we're going to see an eventual move up towards, you know, the 618 and quite possibly above. The euro dollar, like I said, the bid has been pretty outstanding, and so I'm looking for any dip to be a buyer. I'm hoping that the press conference is going to be a little bit more hawkish today and allow for the euro dollar to dip below 114 to be long. That could be said the same thing about the cable. So with the cable, the pound, you know, obviously some pretty big defeats in the amendments and the Cooper amendment yesterday, but the cable's still holding up relatively well. I actually got up this morning thinking the pound was going to be trading closer to 130 and I was going to get long some. But what I'd like to see in the cable is I'd like to see a move down towards 130, maybe slightly below, back to retest this channel breakout. So, you know, something like this, you know, down to 129 and change, maybe 130, and then look for a bounce. So not only in the euro dollar am I looking for some sort of a pullback, but I'm looking for a pullback in the pound. Now let me just restate that I'm looking for a pullback, that doesn't mean I'm going to be short trying to, force a pullback. I'm hoping for a pullback. And you know what? We may not get it. The Fed could be uh, 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 really dovish, and maybe Fed Chairman Powell, suggests that the balance sheet runoff could finish before the end of the year, and if that's the case, the euro dollar could be trading well above 114.60 in a blink of an eye, and I'll never get an opportunity to buy the euro on that dip. I will tell you this, that in the event that the euro hits new trend highs, and in the event that we break the 618 retracement here, okay, we break this at the 114.60 level, right out of the gate, with following the FOMC. If we break this, we're probably going to see 115.50 again quickly. Like that would mean that
great nickname for Paul.
What's that?
Foul.
Foul.
You said foul.
I did. I don't know.
He's hit a few foul balls so far, Blake.
The problem with getting up in the 3 o'clock hour is sometimes my words don't match what I'm thinking. So
it's Freudian, man.
Yeah, maybe. I guess foul. So one of the other things that going into, I'm hoping for a more hawkish FOMC and a more hawkish Fed, because what I want to do is I want to buy the euro down here. Okay. Right. What I want to do is I want to buy the euro down here. I don't know if that's going to be the case. I'm hoping that's going to be the case. I don't know if that's going to be the case. But the reason why I'm talking about all this is because if you look at equities look relatively bullish, and they're not selling off. And the longer we hold these gains, the more the risk is to the upside for a break towards 2,800 again. Now, again, the risk reward tells you need to be short here. I don't argue that. I look at the S&P and I'm like, okay, I should be short, but it's not rolling over. So the risks are starting to mount that as we don't sell off, that that we break higher. Now, if we do have a dovish Fed, then the market is going to probably cheer a dovish Fed. So that goes back to looking at like some of these yen pairs, like the euro yen. They could really break out. Pound yen, or not pound yen, Aussie yen, we could really start to break out to the upside. We start to see a breakout in the Aussie yen, we start to see a breakout in the euro yen, then you're going to see that S&P probably break through some of this topside resistance. And then that brings me to the last chart I want to show you, is crude. This crude chart, actually there's two charts I want to show you. This crude chart looks pretty damn bullish. I did tweet it out this morning. We have this big inverted head and shoulder pattern. I remember when, people were like, if you go back 2 weeks ago on Twitter, and everybody started to get really bearish crude right around here. They're like, oh, big reversal on crude. We're going to continue our, downtrend and blah. I tweeted something a couple weeks back, and I said, look, you got to use your imagination here a little bit. And I carved out the right shoulder way back here. And I'm like, just crude looks like it's going to form an inverted head and shoulder. That was way back when. And now it looks like we're getting close to a move above 55. Now, if that happens, okay, we see a move above 55, we got a dovish Fed, we got the stock market rallying, we've got the dollar selling off. Then the last chart I want to show you is the US dollar Canadian, which we have a big bear flag, and we break up below this 131.80, 131.70. Things are going to get kind of bearish. Now, if you guys are ForexAnalytix subscriber, you'll notice there's an active pattern in play by Steve, who's got a bear flag pattern already in play. This looks like it's going to continue. So I think if I was Steve, or if I was anybody shorting the US dollar Canadian, you want crude up, you want the Fed dovish, you want stocks to be stronger going into the FOMC today. And with that being said, I can bring in my colleague Steve so he can talk a little bit more about his bearish dollar Canadian setup.
Hey, Blake.
Good morning.
Oh,
hey.
There he is. Oh, no, not
morning,
you,
mate.
Stelios. I was talking to
Not
Steve.
you. Nobody wants to speak to you.
Yeah, not you.
I do.
Good morning. Good morning.
Be nice to
gentlemen.
him.
How you
now
doing?
and then. All right.
So
Hey.
before I turn it over to you, Stephen, you can talk a little bit about the potential with the dollar Canadian and maybe what you see in crude as well, because I know you updated the crude charts on the ForexAnalytix platform this morning. But before you do that, I should mention that today, if you guys haven't visited Forest Park FX, you should do so, because if you want to be part of the ForexAnalytix community, you want to, but you're like, well, how do I get in with the chat rooms and how do I join the community? One of the best ways to do it is through the reimbursement program, where if you're trading, you can have your trading help subsidize your subscription with ForexAnalytix. So all you have to do is contact them on Skype or their email, which is brokers@forexanalytix.com, but the Forest Park FX actually addresses all those emails, and so feel free to reach out to them and figure out how you can get ForexAnalytix potentially for free. So
They'll answer the phone too.
They do, but most people are international,
Yeah.
so that's why Skype is usually the best method.
They'll answer that too. Right.
They will. They will. And then, once you're part of this community, you can, jump in our chat rooms and you can see, I hate it when it does that.
Join the FX Mafia with all of us, guys. Do it right now.
Yeah.
Be a made man.
So you can see our chat room here. There you go.
Look at those gangsters in there.
Bunch of
Action junkies.
Action junkies in here. There's only there's 100 of us in here this morning. Usually there's 80 to 110. So anyway, and so there's great community. We talk about charts, and you can actually go over here and see all the charts that are posted, and who's pointing or who's posting them, and even Fat Man Batman. All right, I'll let you guys go here. All right, so have a great trading session. Steve, Stelios, Coach, it's all yours.
Okay, Blake.
Steve, before you start,
Good Fed day to you, Blake Morrow.
Thanks. Good luck today.
Thanks, Blake.
Same
So
to you,
first of all, I want to say hi to my friend Costas, who's listening. Coffee next week, Costas.
Hey,
Right.
Costas, welcome to Face. You knew Stelios when he had hair, I heard.
Oh,
His
yeah.
name,
yeah.
Is his name really Costas?
It is, yes.
Wow.
The only
It's a Stelios, Nick, and Costas. That's pretty much it. Those are the only. You guys need to be more creative with your names.
The only person that knew Stelios when he had hair, Coach, was his mother.
Hey guys.
Yeah. So on that note, let me just recap what happened yesterday for people who missed it. We had obviously the vote in the UK. Most of the amendments were not passed, and sterling suffered a little bit. I mean, cable sold off about 100 pips or so. There were two which were passed, and one was. One was a non-binding one. Basically, it's a vote against leaving with a no-deal Brexit. And the Brady amendment basically asked the government to negotiate again the agreement with the EU, particularly with regards to the Irish backstop. Now we know that the EU have been very firm about it. They've been very consistent. So what's going to change this time? I don't know, but you know what politicians are like, and bureaucrats and all that. So maybe something will change in the end. I don't know, but this is May's mandate now, and she's going to go back to the EU and try to do something. You know, it is actually quite. You know, it's like a soap opera, but let's see what the next installment is. Now, the other thing we have is obviously the Fed later today. It's interesting to note that rate expectations, if you look at Fed fund futures and Eurodollar futures, the curve is actually pricing a slight chance of a hike in this year. When I mean slight, I mean 5 basis points. So really, yeah, you know, so, 20% chance of a 25. Yeah. Hike. And then if you go into the reds and greens, so a year forward, 2 years forward, it's going inverted. So it's going back to pricing cuts. Not a lot of cuts, but you know, maybe 15 basis points. So basically,
give it a little bit of time. Give it a little bit.
Yeah, the market actually doesn't know what to do with the Fed at the moment, and it kind of makes sense because, like Blake has said before, Powell changed his stance a few weeks ago, becoming much more dovish. Now, you know, the numbers have been turning, you know, leading indicators have been turning. Inflation has come back from 2%. It hit core PCE, hit 2%, which is what they're looking for, and then it went back down. So it's difficult. I mean, GDP is still doing relatively well, but it's difficult to see how the Fed can keep going like this, especially with Trump being very vocal about, you know, being against higher rates. So that's what we're expecting today. You know, the Fed is broadly expected not to do anything. It's not really going to do anything, I'm sure. But you know, the statement is going to be where everybody's going to be looking at, and that's about it. I don't think we have anything else from.
I think the market is specifically looking today, Stelio, for what they're going to do about the balance, as we were saying yesterday about their balance. So
yes,
if we do get something. From that, I mean, if they show that they're more flexible with the path of reducing the balance sheet, I think that this is the cue that, you know, the Fed has turned a lot more dovish, you know, on all aspects. And yes, as Blake said, I think that that's going to actually help the indices push higher at least once again. I mean, we're seeing, for example, the S&P is clearly within you know, triangle, so it's like a horizontal consolidation. It's coiling, so you know that would bode well with another push higher from here. I think quite well, and yes, that would also help several FX pairs, like for example the Aussie break higher, the USD CAD continuing lower. Another one that looks good for a continuation lower. We can even look at it on the daily chart is USD NOK, because that would probably push it here on the head and shoulders formation neckline. USD MXN is also a pair that is consolidating within. We're not sure yet. This might prove to be like a flag. It can end up being a triangle. We need a little bit more price action to determine, but definitely some risk on would help the pair push lower towards this ascending trend line support once again. So, you know, many of the FX pairs would definitely benefit from such a scenario. Now, at the same time, you know, USD yen might probably give us one more higher high here towards 61.8 likely. So, you know, that would go well with all that. At the same time, going to the metals, that would help gold and silver perhaps appreciate a little bit more, although they're quite stretched in the short term. There they are. Silver today almost touched the 61.8, which was my, the zone between the 61.8 and, this horizontal resistance area at 16.15 is, my ultimate target. That doesn't mean that we can't overshoot that, but that's what I was looking for when we were consolidating here. So I do think that it's quite clear what's going to happen if we get something like that. Now, if that doesn't happen, so if the market gets disappointed by the Fed not being as dovish as expected, obviously we're going to see the exact opposite happening. Those pairs that I said would benefit will probably pull back, and risk might actually break down from this triangle. If you see the Nasdaq more or less is in the same situation. The Dow is expected to open higher. By the way, we had good Apple earnings, Boeing as well. We have some positive. We have a positive reaction coming for some news that we had, from earnings. So that's it more or less as the broader picture. Now we can go ahead and have a closer look at a few things. Let me see first of all if we have any questions. At market sentiment help. Would looking at market sentiment help? Yeah, absolutely. But indicators like market sentiment are usually nice contrarian indicators, especially when you see, mostly actually when you see sentiment being very extreme, so very bullish or very bearish. Then that some kind of a trigger to the opposite direction is definitely gonna escalate further. And the same with positioning indicators, right? So when the market is positioned, very long or very short something, you can easily see, an unraveling of that position, and then it's a little bit of a self-fulfilling prophecy, because when the market is
Steve?
completely. Yeah, coach,
For
go
a
ahead.
minute. I'm just thinking, I was kind of like in your camp, looking for metals to rally into these zones, one more shot up, and here we are. And I'm just wondering if your view has changed, and what it would take for you to start positioning yourself on the short side, if you believe that this was just a bear market rally and there's going to be a continuation move to the downside, or what would convince you that we should still be long and it's going higher?
Okay.
What do you
think? First of all, since my bias is that we might turn lower from here rather soon, what would get me more convinced would definitely be some kind of a some big daily reversal.
Okay.
So some kind of a candlestick formation, confluencing with some kind of an important level.
Yeah.
So, for example, let's assume that we have like some kind of a big day higher today, and tomorrow we turn lower, like strongly lower, and then I can interpret this, let's say, like an exhaustion move to the upside that found resistance and reversed. Or let's say that today we have like a move higher, and then by the end of the day we reverse and we end up closing lower than yesterday, or any kind of a reversal.
Okay, so you're looking for a reversal candle to start it off. I think it's a good idea because I have a tendency to just do it at an area, thinking I'm going to get a reversal candle. And you never know until you get it. So again, reinforcing Mr. Confirmation. You don't have to be trying to pick the top. You need to have technical reasons to do so. We don't have them yet, but you're stalking it. Am I reading you correctly?
Yeah, absolutely. Now, what would make me, for example, change my mind about silver, that there's no more low and we actually found a low, would definitely be a higher high, which would require a breakout from the 1730 area of resistance. So it's some distance from here, right? A break above 1730 would definitely make me view this completely differently. And now equivalently with gold, I would have to say that I would need to see a break above 1360. So a break above 1360 and this trend line resistance, that would make me view this formation with a different pair of eyes.
1500, you'd get 1500 or so off a breakout.
Yeah, it's very likely. I think we could. Yeah, I think that the next big target to the upside would be 1530 to 1550 if we actually break above 1360. Yeah. So I think there's going to be a decent. I think there's going to be a decent amount of upside if we actually make it above there. Now, having to do with,
because I have to admit it's kind of exceeded my upside expectations when,
Oh
from
yeah.
when it was down under 1200. I was thinking, 1250, it was 1160, the 1240, 1260 was going to be it, and here we are, 1316.
Yeah, of course, because
Yeah.
making assumptions when you start seeing a rebound of where that's going to go is a good thing, because it's always good to have a plan in place. But thinking that an assumption is what's going to happen, it's
It's
obviously wrong,
delusional.
because
It's delusional.
it's delusional. Yes, because you should have some levels in mind,
Yeah.
but then you should get some kind of a confirmation that one of those levels is actually working,
Price.
so you can exactly
You need some price to tell you. All right, buddy. That was a great tutorial, and so I'm going to be on the lookout. Go ahead.
Speaking about sentiment, by the way, and since our friend mentioned it before, I have to say that after the recent moves that we had, if you notice here across the board, there is absolutely no
Ultra
instrument
bullishness
that has extreme sentiment, either bearish or bullish. I mean, with the exception of orange juice, which I don't trade it or whatever. Everything else is between 80 and 20. So in essence, nothing is really, nothing is really standing out as an instrument that the market is overly bullish or overly bearish. We had, up until recently, we had some extreme readings, which have now been worked off with the recent price action. For example, some time ago, we had an extreme reading in crude. The market was extremely bearish crude, and what a surprise. It was extremely bearish crude when we were actually finding a low after a huge move lower. I mean, this is how the market works. I mean, the market was very bullish crude at 76, and then down at 42, the market was extremely bearish. I mean, we had already seen a move from like 76, 77 to 42. So in essence, crude had been almost cut in half within a very, very short period of time, and that's when when the market was more bearish than it had ever been in the quite recent past. So obviously, that was the fuel needed to get the fire going. And
let me tell you something, Steve. I'm going to call you on it. You had so much conviction about a 10% rebound that you didn't even wait for confirmation. You were scaling in as it continued lower. So this you talk about, you wait for it. Yeah. So that was a little different than what you normally do, don't you think?
Yeah, but sometimes you get extra conviction. And when I saw this candlestick there after touching 42, that was the point that I knew that I was positioning myself in the right side. You know what I mean? That's when I said to myself, okay, you're definitely going to make some money out of this. You know what I mean?
But in market wizards, they say all the wizards knew when to break their rules. So you were scaling in before you had any confirmation, because you've seen this movie before.
Oh yeah, especially with crude, we have seen it. I remember the sentiment when crude was trading at 20 something, reading articles how crude is going to be soon trading at teens, like it's going to go to 17, 18, 16, how it's going to go to 15, some BS like, can crude go to single digits? And I was like, yeah, sure. People are going to keep extracting oil just to make a loss. Don't worry about it. Yeah, absolutely. So it's the same kind of a situation. The market moved too much, too fast. Everybody started turning bearish, and that's exactly when we got the reversal. And I don't think it's over. As you see here, we drew that a long time ago when we were here. As you see here, I'm looking for more upside. I'm not sure if it's going to come from here. If we go down to the 4-hour chart, potentially this is actually I posted. This is not because they've changed this one. Yeah, I posted an update earlier today that if this is a triangle, which looks very likely, we're breaking above it. Of course, after the Fed, we're going to have confirmation, because with corrections, you never know. We might end up having a triangle that's going to be something like this, a flat top triangle, in which case, for example, we might get rejected from there, go lower towards 50, 51, 50 once again, then move higher once more and break above it. But so far this looks like a triangle that we're breaking above, and if after the Fed that proves to be the case, I'm expecting more upside, and the real the real next upside target that I see here, if we make it above the recent highs, is almost at $58. And by that time we have already triggered the big inverted head and shoulders formation. We bottomed out creating a little head and shoulders formation, and now we are likely creating another head and shoulders formation much bigger, which would have a target, would have a measured target, another $12 to the upside. That's going to be roughly 66, 67. So up there, right? Up there, as you see, support resistance area. So, there's a lot more upside potentially if we break above it. Now, of course, I wouldn't be, trading, aiming at that high target at 66. Not that it's, out of the question or unattainable. But 58, I think, is very easily doable. It was also that high over there, 127% extension of this last leg, last bearish leg lower. So yeah, why not? 58 is easily doable if we break above there, and another $4 from 54 is like another what, 8% to the upside. So there's a lot more money to to be made to the upside if we confirm that. On the other hand, so far I've preferred being short the USD CAD. Very nice corrective channel, broke below it, came up, retested it, and it looks good to me for another move towards 130. So I'm very happy being short here. I'm already decently in the money, so that means that I even have a cushion ahead of the Fed, right? I know that other people are preferring USD NOK. Blake has a pattern playing USD NOK, and he jumped the gun there, and very rightfully so. He had a hunch that head and shoulders formation is going to play out, and so far this has vindicated him. So, those are all good places to be positioned at. And if you position yourself ahead, as I said, sometimes you get the benefit of being in the money. So you have the benefit of having a position that you can handle without stress, ahead of the news, right? So
Steve,
maybe
have you had a look at Swissy? Friend Jack is asking for that.
I just saw it actually, and
you showed it, okay? Because I missed.
No.
You just saw it.
I just saw the question. So yeah,
okay.
I'm gonna have a look at it now. And here is the Swissy. No real surprise there, and that bodes very well with more Euro USD weakness if you're looking for that. If you remember, I said that USD Swiss looks better. It seems to be leading Euro USD, and one of the reasons it seems to benefit more to the upside than the Euro USD is doing to the downside is the fact we saw that a few days ago, is the fact that Euro Swiss pushed from this support area higher, and we're now approaching this resistance area. If we make it above this 114.50 area, then there is more upside for the Euro Swiss, and that should help USD Swiss do better to the upside than the Euro USD is going to be doing to the downside. So, the breakout from this channel, retest and move higher, was a good indication that if you wanted to be short the Euro USD, it was better being actually long the USD Swiss. And now we're approaching resistance. If that resistance gives, once again, it's going to be the same, because then there's going to be some free space for the Euro Swiss to move higher towards 117, and that will definitely benefit USD Swiss. USD Swiss looks quite constructive to me, to be honest. We found support in this ascending trend line support. The move lower, we had indicated that several times, was clearly corrective in nature. So I like the fact that we broke above it. So I think it still looks good. Definitely looks better than the Euro USD, which is a mess. I mean, Euro USD, I've had to redraw this consolidation like multiple times because it's very messy, it's very choppy, it's extremely overlapping. RSI also indicates the same thing. I mean, look for how long the RSI has not even hit overbought or oversold levels on the daily. That's a good indication that the pair is actually doing nothing. It's treading water. And, why would I want to be involved? Why would I want to tie up capital in trying to actually manage around this pair? I mean, there are, for example, much better, being in the USD Swiss than trying to figure out what's happening here with Euro USD. But I have to say that, if you put a gun to my head and I had to do something with Euro USD, I would probably be short. But, as I said, that's only with a gun on my head, because what I want to do with it is absolutely nothing. I just, want to stay away from it until it finally shows some signs of life. Until then, I'd rather let others trade it, and, I'd rather trade what looks much cleaner on a chart than what looks so messy. Let's see if we have any more questions. Hope the FOMC gives us more entries again on Swissy. Zach, that's very likely, mate. Hopefully, one of the reasons why we had so much calm recently is because the whole market is waiting for the FOMC today. So I do believe that once we get our hands untied, because we get that out of the way, one way or another, we're going to get some volatility, and the markets are going to be more tradable again until we get closer to some big event risk. So I do believe that the markets are going to be, for the rest of the week, most likely more interesting than they've been so far this week. So I do think that in a few hours, we're going to get probably some nice moves, and why not some interesting setups playing out, or forming, so we can actually benefit from them. Coach, by the way, we do have an interview today, right?
Yes, at Trader Maine.
Okay.
Maine will be with us.
And what are they going to talk about?
Well, it's my first interview with Maine, so we'll see. I know that he does trade crypto, and as we're learning, a lot of people that were trading crypto, a lot of them come from FX before they went to crypto, and a lot are coming back to FX.
Yeah, exactly.
Because crypto's really thinned out. So, they're all traders. I mean, here's my philosophy, Steve. It's not the title of the chart that matters. It's the only difference is leverage and beta. But if you know how to trade IBM, you could trade the yen. If you know how to trade the yen, you could trade anything. So to me, a chart is a chart is a chart. How about you?
Oh, I agree with you. I agree with you.
So anyway, we'll see. We'll see. Maine has a nice following, and looking forward to meeting him and seeing what's on his radar. So sometimes I don't know what's going to happen during an interview.
That's good, actually.
That makes it, exciting. I've never scripted one. I don't script them.
I know, and you don't need to. Speaking of crypto, Ethereum has a quite upside, quite a good upside day to day. It doesn't seem so on the daily chart, but it's almost 4% higher. So, Ethereum looks more interesting.
They're all putting in, they're all putting in higher lows, Steve. That's what has me attracted to it right now.
Ethereum looks more interesting to me lately from a technical perspective, because at least here, I have a nice descending trend line. I think that if we do break above this, we can see another push higher, perhaps towards 240.
Trade.
Yeah, Bitcoin, on the other hand, looks less constructive to me, I have to say. So, if I had to buy one of those now, I would probably be buying Ethereum.
Okay. Yeah, they all kind of look the same to me, but there is better RSI structure in Ethereum. I kind of noticed that a few weeks ago.
Yeah, and technical. Oh, by the way, this XRP is almost 10% higher today. Phew.
Ripple.
Yeah, Ripple, 10% higher. So perhaps
I guess there's some news that some banks are going to try it. They're going to try and use it. Anyway,
I think
you know, I
this is
started
also,
paying attention to these markets, Steve, really for the first time in my trading career. All of them look like there's, you know, I like the fact that there was, you know, buy when there's blood on the street. Well, you know, this market is bled out. Okay,
yeah,
so
and look at Ripple. This
yeah,
trend line is actually very interesting and a very nice setup here. This descending wedge. So I think Ethereum and Ripple, they look, you know, quite decent if we get the equivalent breakouts from
okay,
the descending trend
all
line.
right, Maine. We'll reschedule your
You're the one that said that the chart is a chart, right? Not my
yeah,
boss.
all right. Maine, thank you for being with us and doing your ventriloquism through Steve Balky. Your Steve was sitting on Maine's knee and he was pulling the cord. Anyway, I'm looking for you. I'm looking for you, Maine. Anyway, Crypto Maine, I believe you're under. So, are you through with the review?
If he's here, you can start. I'm going to go over a few more things as long as you're looking for him. Copper,
Oh yeah, go
back
ahead.
at resistance here. So I really want to look see what's going to happen from here. I don't have a position anymore. My second half was stopped at, as I said yesterday again at break even. So I have no stake in the game here. But you know, bearish scenario we get rejected from here. We look lower. Bullish scenario, we push higher towards this trend line, in which case we can then start talking about a potential double bottom formation. And if that happens and we break above there, then we have a range that's quite decent. It's like 30 cents range. So then you can be looking for an upside potential that's another 30 range, 30 cents, which should target this resistance area at 33.15 once again. So, you know, if we make it above there, I think we have quite a nice upside target. But, you know, as long as we remain between there, I think there is no real trade to be made here. Palladium is not breaking down. So far, this looks like a consolidation. So I would be a little bit careful because we still remain within this ascending channel. Platinum still near the lows. I think, you know, that's the first one that's going to go. And the gold silver ratio is still going as predicted here. Be careful, 81, 70, confluence of supports below that 80. If we break 80, then it's a totally different ball game. But until that happens, I think, you know, you should be careful in jumping the gun, being short, especially if the metals turn lower, then the gold silver ratio should start overperforming once again, and we should remain for longer within this larger red ascending wedge. At some point, I'm pretty convinced that this ascending wedge is going to break down, and when that happens, we're going to have a lot a lot of more downside coming. But you know, we have some time until we can consider that as a potential trade. Now, one more thing. Nice reversals yesterday in the pound crosses, especially I wanted to show pound Aussie. This is what we drew some time ago in the pound Aussie. We had a retest of this nice confluence. You see ascending channel 78.6 previous highs. We got rejected from there, but now we're retesting support. So be a little bit careful because this, you know, if you wanted to short up there, made sense. Now down here, you know, testing previous resistance and support, so you should be a little bit more careful. And pound Kiwi coming down, retesting so far the inverted head and shoulders formation. So this is a do or die zone. If we hold this, we can see more upside. If we break below here, we invalidate this inverted head and shoulders formation. So, you know, we have to start looking at it with a different pair of eyes. But from a risk reward ratio perspective, being long here makes sense. Big level. Okay, so is your guest here, Coach? We have a friend asking for gold and silver. I covered them before. You can go ahead and watch the recording. It's posted roughly a couple of hours following the webinar. You can find the recording either on our YouTube channel or outright on our site. If you go to ForexAnalytix, there is a section up here called Webinars. There is a section here called Videos, right? You can find the videos chronologically put here or through the playlists from the playlist tab. So, Coach, do you have your guest?
Still looking for him. Crypto Main, are you here? If so, send me a question in the question box.
How do you spell his name?
He said he was going to be registering under Crypto Main at gmail.com.
That's email, though.
Yeah, I don't.
We have a crypto CUR. I don't know if that's him.
Yes, I know his Twitter.
His Twitter is Trader Main. Okay, with MAYN. No, I don't see something like this.
Yeah. Well, we'll give it a minute. He told me he was booting up his computer.
Okay, let's have a look at a few of the yen pairs, which we haven't done in some time. So let's go ahead. So first of all, Euro yen. Euro yen, previous support, being resistance here, and the 61.8 of the last leg lower, quite a significant resistance area. Obviously, risk reward favors shorts here, but if we do break this level, I think that we're going to make it to 127 next. So be careful because it's a binary thing here. We make it higher, we're going to push to 127, which is almost 200 bips higher. We get rejected from here. We can easily come down and retest 123, 122.50, 123. Pound yen. Pound yen remains within this descending channel. So, currently testing support, but, even if we push higher from here, I would be a little bit careful because once we come up and retest this channel, I wouldn't be surprised to see a rejection. I would actually probably trade it if we make it up there and we see a nice rejection. I think, it's going to be quite a nice trading opportunity. Let's have a look at the Aussie yen. Aussie yen, if you see, it's more or less the same kind of setup that we have with Euro yen. What happened, Coach?
He said he didn't have the link yet. So anyway, I'm going to send him the link.
Aussie yen testing the exact same confluence that Euro yen is testing, which means the 61.8 of the last leg lower and previous support area as resistance. So same deal here. We either get rejected from there and make it down towards 7620, or we breach this area. And I think that if we do that, we can easily see 81 quite soon following it. Obviously today the Fed and if we get some risk on is going to help or not with that. Kiwi yen, triple confluence of resistances here, 61.8, 200 daily moving average, 50 daily moving average, almost there as well. Horizontal support resistance area, so 72.25, huge resistance area. If we get rejected from there, look lower. If we push higher from there, 76.12 is the next upside target you should be looking for. CAD yen, let's visit that as well. Here it is. CAD yen, confluence of resistance is a little bit higher, 50% fib, horizontal support resistance area, all of them roughly 20 pips higher from here. If we make it above there, nice confluence of resistance is at 84.80, 61.8 and 200 daily moving average. We can easily make it all the way up there and still remain bearish in the longer term because we've breached this triangle to the downside. We then formed a channel. We breached that to the downside. So there is more room to the upside that we can move and still maintain a longer term bearish outlook. Okay, so this is how I view CAD yen. And a fast view on the bonds, which of course can move quite a lot today following the Fed. Consolidation here from the 10-year treasuries. We either get one more leg lower or outright higher from here. But even if we get lower from here, I think that we can see more strength following that, and Bund quite more clear, quite more easy to read. We've breached a major descending channel, corrective one to the upside. So even if we pull back from here, as long as we stay above this blue trend line, you can expect more strength. I think that being constructive with Bunds is the way to go from a technical perspective. It's quite clear here. I would be careful though in the short term. Clear RSI divergence in many time frames. You can even see it here on the daily. We've had quite a healthy move from 157.40 all the way up to 165.40. So that's already, I mean, we had like a straight, what is it? Like 5% move to the upside. So, we can easily pull back a little bit before seeing more strength. So, coach, any news?
Yeah, he's coming in. I'm just
Oh,
waiting.
I think he's here. Trader Main, I see.
Trader Main. Okay, let me look for that. He said he was coming in on something different, but okay, Steve. So thank you for continuing on,
My pleasure.
soldiering
So
on.
good luck, everybody. Obviously, we're going to be covering the event live in
The
Forex
Fed.
Analytics. Yeah, on the chat room, we'll be sending updates, etc., as
So
usually.
if people take the trial, can they can come into the chat room? They just can't participate by
No,
sending
they can
texts,
also
right?
they can also participate. They have full
Oh, what a
access to our
great day!
service.
Yeah,
Yeah,
what a
they
great
have
day
full
to
access.
take the trial.
Yeah, they have full
Yeah.
access to our
See.
services for 10 days.
Okay.
If they take the trial, yes, and it's only $1 for 10 days.
Okay, buddy. Trader Main, I see you. I'm making you the presenter now. Hope you got a note from Mr. TA for being a little bit tardy here today. Thank you for taking time out of your day, buddy, and welcome to Face.
No worries. Thanks for having me here.
Yeah, it's great to have you, Main. It's I want to talk about the markets with you, but I'd like to start off with how you broke into the trading business and possibly what you were doing before. So why don't you tell us a little bit how it was for you at the beginning of your journey?
Of course. So I got into trading. It would have been in 2012, I guess. Was
Okay.
initially when I was introduced to, cryptocurrency, Bitcoin, things like that. So I got in, as many do, by a friend telling me about what crypto was, asking me to invest in this magic internet money. So initially I had, my doubts and my trepidations. The guy who actually got me into the space was a guy who would always come at me with these like weird pyramid schemes.
Okay.
So I had some doubts initially, obviously,
Right.
and I didn't take him seriously right off the bat. But it wasn't until about 2013 when the market really started to go on its first bull run, for lack of a better term, towards $1,000 or whatever it was. That's when I started paying more attention. I joined Twitter, and I would basically buy any sort of coin that anyone would talk to me about. Anyone would post on Twitter, hey, here, buy this altcoin or whatever it is. I was, completely a uneducated investor. I was just kind of going off of the news and what people were telling me online to buy. And I kind of learned the hard way. So I took a lot of licks. I lost a lot of money. And I think that was the best learning experience for me was kind of getting in there and just going through a market cycle more than anything, an accelerated one at that, where I was, kind of eaten alive, not really knowing how to short the market. Once the things turned around and the market actually started going down kind of in the start of 2014, I lost almost everything I had invested in the space at the time. And that kind of started me on my journey of learning. Was like, okay, obviously there's money to be made here. This is something I'm interested in. Let's learn how to do it properly. So in 2014, 2015, 2016, that's when I kind of began my education. I was, joining trading groups. I was joining webinars. I was going to like trading live conferences, etc. And then I found some mentors, ICT, Michael Huddleston being one of them.
Oh, I've interviewed Michael. Yeah.
Yeah. So I love Michael. I mean, that was probably one of my biggest influences in my trading style. For those who know me, I use a lot of order blocks and price action. Most of that I derived from Michael. I've also done, Tom Dante's webinars. I've done Chris Laurie's stuff. I know you've had Trader SZ on here before. I've studied his material as well. And I really
Chris
kind
Laurie.
of cut my teeth.
I tell you what, try and name someone I haven't interviewed.
You've kind of got the gambit of people, right? So
yeah, you know what? I just want to interject something here. Is that it's amazing to me the story I heard that you just told us, because you said it was a great lesson. Because you can't learn experience, right? It only comes with the passing of time and living through things and stuff and adversity and being persistent. So, congratulations on, getting, sometimes in trading careers, you not only get punched in the face, sometimes you have to get up off the canvas to fight again. So you're a warrior, man.
yeah, no, I mean, a lot of things that I tell people who are new is, losing money is part of the journey, unfortunately. A lot of people will start trading in a demo account, and there's nothing wrong with that. I mean, I definitely think using a demo account, especially if done properly, can be a good learning ground for people. But the game completely changes when there's actual money involved. You can have a system that you figured out and you're trading your demo money and you're growing it. But then when you're actually putting real money on the line, it's your money, it changes psychologically.
It's in your head.
There's just no two ways about it. You have real money on the line, it changes the game. And so to me, my best learning really did happen, when I was losing. Obviously I was smart about it once I kind of figured out what I was doing and I learned about risk management, and I would mitigate those losses. But at the end of the day, you do have to, be okay building up that thick skin and that mental toughness, because to be successful, at least in my opinion, trading, you have to kind of be emotionless. So to me, the way I always try to describe it to people, when I enter the trade, any trade, the money's gone. It's already gone. It's not. Is it going to come back worth twice as much as what I originally put in, perhaps? Or if I'm risking $100 on the trade, that $100 is gone. So if I get stopped out, it's not a big deal. And a very common thing you see in new traders is that emotion. So when there's money involved, let's say the trade starts going their way, they're adjusting their stop to break even almost instantly. Or they're taking profit very early. Or if it's in the red slightly, they cut the trade, right away, only to come back and see that, it's gone to their target, but, they get nervous. So, that emotional hurdle, that's one that took years for me to really kind of develop the thick skin that it takes. I mean, this is a nasty business. I mean, to be able to do it for a long period of time, losing money just is part of the process now for me. It's not even, something I think about, whereas, 5-6 years ago, it was all you think about. So, it's a tough time in the cryptocurrency market, especially right now. But for those people that are still in it, still grinding, still trying to improve, you're doing yourself a big favor for the next, potential market cycle.
Okay, do you think that there's been enough bloodletting with Bitcoin down over 80% and Litecoin and Ethereum 90%? And actually, they all seem to be carving out higher lows from the January low, at least so far. Is this still the main asset class that you trade, or do you take your trading to other instruments?
So I trade a lot of Bitcoin, Ethereum, and Ripple. I don't really touch any of the other altcoins, outside of a very rare occasion, just for liquidity. The volatility in them can be insane. The manipulation that goes on some of these pairs on sites like BitMEX with these, 10% wicks. I just have no interest in that. I actually probably say I trade more Forex than I do crypto, but crypto is, what's popular. Crypto is what gets interaction on my Twitter page. So I do put a focus on that because it is what people want to trade. It's funny. I feel like because a lot of people made a lot of money on crypto, even if they've lost that money now, there's an emotional attachment to it. So they want to trade it. They want that feeling of, getting rich quick again. It's a lot of gamblers that get attracted to cryptocurrency is one thing I find. A lot of people come from poker. A lot of people have no risk management because they came in, and if you bought anything in September of 2017, you almost assuredly made money, right? So I understand why people are addicted to it, but I mean, the market's been going down for a year now. This does look like a potential first higher low. From all of the technicals I have, if we are going to bounce, to me, this is where it's got to happen. So I don't think it's going to be this V bottom reversal, so I mean, if you compare this to any other market cycle, like gold, for example, right? I mean, which took 20 years to complete this kind of a market cycle. This is looking close to bottoming out. I mean, we're definitely a lot closer to the bottom than we are the top. So, for new investors, I definitely say, listen, the time to short the market is not now. Unless you know what you're doing, you should either be sitting on the sidelines or slowly be starting to scale in to the cryptos that you like long term. But I do think we're going to have a little bit more prolonged sideways. I think a lot of the down movement has happened. We could drop another 50% from here. If we do lose this kind of floor that we're on, I do think we can go to, $1,800 to $2,400, which is a big drop. But, if you start buying in at 3,000 and you're getting in on the way down as well, and we do eventually go through all-time high again, you're not going to be too concerned that, some of your buys were at 3,500 and some were at 2,500. You're just going to look like a genius for getting in that early. If it goes to 20,000 again, right? So,
are you in the U.S., Maine?
I'm in Canada, so I'm on the west coast of. I'm on the west coast of Canada. I'm in Vancouver.
Okay. Because I'm curious where you trade and what exchanges you trust that you would leave balances with.
Sure.
When you're not going to trade.
So for Forex, I use Oanda.
Okay. I'm talking crypto.
For crypto, I mean, I have a small amount of money on BitMEX, not a lot. Okay. I use the leverage there as most people don't understand leverage. Part of what leverage is used for is to reduce that counterparty risk, right? You don't have to leave 10 Bitcoins on BitMEX to trade it. You can, leave less than that and use leverage to, still control a significant position. I use.
How about for U.S. investors that are pretty limited on the FX side? Are they also limited on the crypto side for where they could establish accounts?
I know that BitMEX has banned U.S. accounts, is my understanding. So I do know a lot of people use VPNs to access BitMEX and trade it anyways. The risk with that is you will get a message from BitMEX if for some reason your VPN doesn't work or they find out you're connecting from the States, saying that they're going to shut down your account. You have like a few days to get your money off of there. I know there's an option called Deribit, like DERIBIT. I haven't personally used it, but I've been told by several people that it's pretty good. It offers BTC, USD perpetual swaps, Ethereum perpetual swaps. It also has futures contracts. So it's another option. I don't know if the liquidity is as good as BitMEX, but for most people who I don't think are trading massive size anyways, it's probably fine.
Okay, and so you say you trade a lot of FX. We have the Fed here today, Maine. Any view on the dollar or any currencies in particular you're looking to react to the Fed on today?
So personally, on a day like today, I wouldn't be trading. Anytime there's
I'm with you. Red events, you step aside.
Yeah, there's major announcements, and it's funny, you know, I get a lot of people that say, oh, it's non-farm payroll today, you know, I'm going to try and catch a quick 100-pip move one way, you know, only to get stopped out before it rips in their direction anyways. So personally, I wouldn't be.
Yeah, I had a guy come up to me once, Maine, and say, you know, I got long euro.
Yeah.
Right, the number came in weak, and the euro rallied 100 pips. And I got out and I said, good guess.
Well, exactly. You're flipping a coin, right?
It's binary, roulette.
It's completely random in that instance. It's no different than when like a crypto exchange goes under maintenance. You know, people are like, oh, is there going to be some huge pump that's happening? Maybe I should enter a long or a short. And I'm like, why even bother? Why not just wait? There's so many trading days in the year. Do you need to trade on this exact day? So right now, I'm long-term bearish on Euro USD, and I'm long gold and silver. I've been long gold since about 1180 back in November, and I'm still targeting higher prices. I mean, we came into what I saw here in this kind of pink area. Going to delete these here. I thought we might have some sort of pullback from this kind of weekly resistance area here, and we consolidated under and absolutely nuked right through. So I mean, gold looks bullish to me. So any sort of pullback, I would be looking to add to my position. Pull back into the high 1290s, and I think we're going to clear out this high. I mean, I think on the weekly, it's very clear where gold wants to go.
Where?
I think it wants to go here. So I think we will see 1350 on gold here in the near future. So I've been long this thing. I posted this one on Twitter. When I longed it, I told everyone I got in long on this pullback here. And I told everyone this is kind of my final target, and I've been scaling off on the way up. I scaled off a good chunk of my position here. But I would look to re-add on some sort of pullback to this reddish block here, targeting these highs.
Yeah. Okay, so why do you think it's going to stop there? Any reason that was your target, just a previous supply zone, or?
Yeah, so I mean,
okay.
The ICT, you know, terminology would be like equal highs essentially. I mean, obviously you have these kind of wicks here, but to me, this looks like just a major swing where, you know, there's going to be liquidity, and it's a level that was previously capped in price, basically, right? So if you have like a rectangle kind of idea from here, to me, it's going to come up and test this level. I don't really see much resistance now that it is through here. To me, this move up should be relatively smooth and quick. And I think, you know, a lot of the news agencies and stuff have been bearish, like CNBC, et cetera, have been bearish on gold. And so usually to me, that's a great counter. So I'm expecting us to come up and test 1350. I think I'm pretty confident in that target on gold. My macro term on Euro USD is bearish. I see a lot of people who are bullish on it. I'm bearish. I think this structure to me looks like it wants to break down. I don't think there's a lot of support if we lose this low here.
Where would your next level come in, at the lows?
I think on the weekly chart, we could come down towards parity, which is crazy to think. But
there are a lot of people that think that could happen still. You're not. No one's going to institutionalize you for saying parity.
Yeah, exactly. So I mean that's kind of my long term. I have an idea posted on my Trading View from back in the spring where I've kind of targeted basically from like 1.18 all the way down to parity, and I definitely think that's kind of my long term target for Euro USD. Overall bearish. Euro CAD, I finally think this run is over. I think we're going to be heading back down to at least like 1.31 in the near term, and then hopefully lower. I mean, this has been on an absolute rip, and I think a lot of people were expecting it to just keep going. I had people mentioning that the dollar
because of crude oil.
Yeah,
we're going to go into the 20s again. So, being from Vancouver, I could see you're probably, had a lot of contact, or it's kind of a natural resource type of, the Vancouver exchanges there and stuff. So you do probably follow commodity markets as well, because that's where you live.
I do. And so the nature of my business, so I trade quite a bit, but I don't actually trade full time anymore. I traded full time for a couple of years, but then I actually started a recruitment company in 2016 with a few friends I went to university with, and I've been building that business for a few years now. And one of the things that we have to watch is the industries. And back when I was doing recruitment before I even started the company, I did all my work in Alberta, right, in oil and gas. And so when that market kind of fell apart, we had to shift into, manufacturing or tech or IT or what have you. So it's always good to kind of have your finger on the pulse and to pay attention. And, being from Canada, this is, a driving force in our economy, right? So
how are things looking up there? Is the housing market in Vancouver still hot with Chinese money?
It's a little stagnant and almost dipping a little bit, which is good. I guess it had to slow down. They did implement some new laws about like vacancy, because basically what you had happening is a lot of Chinese money coming into the city, buying up every apartment, that was put up for sale, and then no one lives in it. And it was just artificially kind of driving the prices up. So, I had a friend who I was helping, go look at places, and I think the place was listed at 680,000, and this is for like a 1-bedroom, 1-bathroom, tiny ass apartment, which is just insane. And I think it was listed for 680. I think he offered 710, and you only get to make one offer when you're buying a house. It's not like you get to come back and counter. You get to put in your offer, and then I think it got bought for like 750. Like they were just buying everything up here. So they have put in some new laws. I think this helped a bit. I do expect the market to kind of take a dip. I'm expecting the economy as a whole to drop. I do think that this relief rally on the stock market is coming to an end. This is kind of the area.
What are your level? Okay, you're showing us now. Okay,
this is kind of the area where I'm expecting things to slow down. See if I can get this a little more precise here. So the way I would watch this level is really
27.15.
So this is the high of this zone, 27.15 here. Yeah. Ideally, I don't want to see too many weeks closing above the middle of this level here. So it's already kind of double topped here.
Yeah. So we could push through it, but not close above it.
I would like to see the monthly continue to close below here. So if we have some sort of wick up, sure. But I mean, this relief rally, I think, caught a lot of people out, right, with their pants down. Because I go on Twitter, I don't know, I get what would this be, a month ago or 3 weeks ago, everyone said the world was collapsing, right?
Right.
So I think Trump called it a glitch. I think it's more than a glitch, but I don't think things look good. I do think we will run back through this low and potentially lower.
What a great interview. The best way for people to follow you and get to know you or hang out with you, what would that be, Maine? Besides your besides Twitter?
I spend a lot of time on crypto Twitter, and then I also have a Discord community that I run with a couple other guys. I think you've had
Mr. TA. Yeah,
Mr. TA on here. So I run a Discord community with him and another guy named Scarface. So feel free to DM me on Twitter.
Al Pacino.
Al Pacino, exactly, the one and only. Before he went crazy, back when he was still a good actor. So follow me on Twitter. Feel free to DM me. As much as my account has grown exponentially, I think I had 900 followers in April, and now I have like 35,000. It's crazy how much it's grown. But I mean, I still remember what it was like to be new and learning. One of the reasons I got on Twitter to share what I've learned is because I remember when I was learning, there was so much shit online. I didn't know where to begin, right? I didn't really know what was good, what was not. I messed around with indicators. I was on YouTube, and I would just, there's so much information. It's almost daunting in a way that you don't even want to start. So part of my mission when I kind of joined the site was to just share free information, point people in the right direction and say, hey, you can learn to do this. It's not going to be easy. Anyone who's telling you you're going to get rich quick and it's not hard is lying to you, and they're misleading you. It is gonna be hard, but there's free information out there. There's plenty of good teachers and mentors. You just got to find them. And so that was kind of my goal, is to just show people, hey, so if you join my free Discord, anyone can message me on Twitter. I'm happy to invite you. Join my free Discord. I have tons of educational content posted on there for you guys to check out, videos that will teach you from the very basics of marking up support and resistance, to the much more advanced kind of actually entering and executing trades and analyzing the markets on a macro level.
Yeah. Okay, well, I appreciate you being with here. It was great meeting you, my trading warrior brother. Hope you have a great 2019. And thanks for sharing some of your market views and methodology and naming some familiar names during the interview, Maine.
Appreciate it. Thanks so much for having me.
Okay, good hunting, buddy. Everyone, that's a wrap for today. Remember, don't just count your pips, count your blessings. See you in members chat for the Fed later today. And tomorrow I'll be having Tracy at Shy Girl. So I'll see everyone on Thursday. You're very welcome, Alexandros. You're welcome, Tom. Thanks again, Maine. And that's a wrap. Adios.